Good morning, everyone, from wherever you are. Good morning, good evening. My name is Coach Rod, and today I would like to use this opportunity to show to you guys how to generate signals with RQTMI one-shot and combat area tactics. So this requires using two tactics indicators. So in RQTMI Motion International, we generate our signals making use of two indicators. What are these two indicators? Take note, this is a way as a beginner you can use to analyze the crypto market. We have advanced ways also, but as a beginner, all you need is to learn how to generate signal using these two tactics indicators that I am going to be introducing you guys to. So kindly pay attention. The two tactics indicator we are going to be talking about are auto fib retracement and MACD, which is known as moving average convergence divergence. The short form is known as MACD. Now, this is what MACD looks like. Once you come on board, you are going to download this app known as TradingView app. This TradingView app is where we analyze trades. So your TradingView is going to be set up in this form where you have these two indicators. The MACD indicator is this. This is how your MACD indicator is going to look like. Then your auto Fibonacci retracement or auto Fibonacci numbers are all these numbers we are seeing like this. So the setup in your trading view is going to look like this, just like I have it on my own trading view here. So there are videos you can watch, you can have access to, and we have classes where you can attend to know how to set up your trading view as a beginner like this. Having said that, these are the two indicators you will be needing to analyze the crypto market effectively. Now, the MACD is one of the indicators, like I said earlier. Then the auto Fibonacci retracement or auto Fibonacci numbers are all these numbers also that you will be needing. So when you have this in place, you need to combine these two indicators to pick a phase perfectly. Take note, your MACD works alongside these different time frames. Take note. But for the subject of today, we are going to be focusing on the 15 minutes time frame and the 1 day time frame. The 15-minute time frame is known as our entry time frame, while the 1 day is known as our confirmation time frame. Now, having known this, you are going to use this time frame alongside with your MACD. Now, there are things we want to see on the 1 day. 1 day is confirmation. So when you come to your trading view and you have seen the coin, in this case, I want to analyze SLM USDT. What you will need to do first is to confirm on the 1 day if the current candles. Now, when you see red candle means bearish candle, green candle means bullish candle. When you say bearish candle, it means that the market is going down. Bullish candle means the market is going up. So on the 1 day, what you want to see on the 1 day, you want to ensure that on the 1 day, that the current candle on the 1 day, which is known as our confirmation time frame, that the current candle on this 1 day is a bullish candle. This is all you need to do on the 1 day. Confirm on this 1 day. What is the current candle? is it a bullish candle? If it's a bullish candle, you are good to go. All you need to do next is to come back to the 15-minute time frame. Please come back to the 15-minute time frame. On the 15-minute time frame, that is where you are going to make use of your MACD and your, that is this MACD. That is where you are going to make use of this MACD alongside with, you're going to make you on the 15-minute time frame. After doing your confirmation on the 1 day and you find it's a bullish candle on the 1 day, then you come to the 15-minute time frame. Just like I'm clicking on the 15-minute time frame and it brings me to the 15-minute time frame. On this 15-minute time frame, what you want to do on the 15-minute time frame is you want to know on this 15-minute time frame, you are going to be using the MACD and auto Fibonacci retracement the same time. They must be speaking the same language. And what is it that you want to see on your charts after confirming on the 1 day that is a bullish candle? What do you want to see on your charts? What you want to see on your chart is, before that, I want you to know that we don't trade every time. We have two entry points at which we trade. We call it entry 1 and entry 2. Take note of that. Entry 1 is between 8 a.m. to 4 p.m. Entry 2, between 8 a.m. to 11 a.m. Entry 1. Entry 2 is between 1 p.m. to 4 p.m. So this is where we are going to be looking for trading opportunity. Take note of that. So having said that, since I've gone to my 1 day and I've confirmed that as of today, on the 1 day, the current candle was a bullish candle like I showed you guys earlier. So since I have confirmed that it's a bullish candle, the next thing I need to do is to come to my 15 minutes where I am right now. Then I'm going to mark the two entries I said. Entry 1 is between 8 o'clock in the morning to 11 a.m. in the morning, which I am going to mark right now for you guys. So right now, 8 a.m. in the morning, this is 8 a.m. in the morning. On that particular day, 8 a.m. in the morning. Let me make it bold. To 11 a.m. Then the next entry we are looking out is 1 p.m. That's the second entry, 1 p.m. in the afternoon to 4 p.m. It is within this entry, this is our trading period between 8 a.m. to 11 a.m., 1 p.m. to 4 p.m. That is what we are looking at. But before you can pick a trade within these two entries, you need to understand that the auto Fibonacci and the MACD has to be speaking the same language. For the MACD, you want to see the MACD because the MACD comprises of this blue line here, comprises of this blue line, which is known as the MACD line. This orange line is known as the signal line. This very green line that you are seeing is known as the zero line. Then these bars is bullish bar and bearish bar. All these lines joined together is known as your MACD. Now, for the MACD to speak the same language with your auto Fibonacci retracement or auto Fibonacci numbers, which are all these minus 61, minus 38, minus 30, 0%, and the rest, you want to see that your MACD is below the zero line, this zero line. So we want to ensure that this line, meaning this MACD line, this blue line, and this signal line, they have crossed down below the zero line. That is what we want to see the MACD do. That is what we want to see the MACD do. That is the condition you want to see your MACD. Now, having stated that that is the condition you want to see your MACD. Now, for your MACD to speak the same language with your auto Fibonacci, if your MACD is showing you this condition that the MACD line have crossed the zero line and the signal line have crossed the zero line, now you need to go and confirm if your auto Fibonacci retracement is saying the same language. And what do you want your auto Fibonacci retracement to be saying? Now, for auto Fibonacci, you want to know on the 15 minutes if this particular market on the 15 minutes is an uptrend or a downtrend. Now, how do you know if it's an uptrend or a downtrend? Like in this case that I am showing you now, whenever you see, take note of this, whenever you see 0% among all these numbers, whenever you see 0% at the bottom and 100% at the top, this is a downtrend. Take note of this. This is a downtrend. Please take note of it. I'm going to talk about uptrend in the other video. When you see 0% at the bottom, 100% at the top, this is a downtrend. Take note of this, please. Take note of it. So in this case, it is a downtrend. So since it is a downtrend, there is a condition for a downtrend we want to see on our auto Fibonacci, that it must meet a condition if it is a downtrend. So what is the condition? The condition is that we want to see the current candle. In this case, currently, this is the current candle. This is the current candle. For a downtrend, we want to see the current candle to be on this 0% line or anywhere below the 0% line. So remember, we are looking at entry 1 and entry 2. So that condition where we are looking at the current candle on the 0% line or anywhere below the 0% line is we are looking at that condition to take place either in this entry 1 or entry 2. Anything outside this entry 1 and entry 2, we are not interested in. All this movement of this candle, we are not interested in it. Where we are focusing on is entry 1 and entry 2. And what do you want to see on your entry 1? You want to see that the current candle is on the 0% line or anywhere below the 0% line for a downtrend, since we have identified that this is a downtrend. Likewise, if this chart still maintains downtrend, when we get to the entry 2, we also want to see on the entry 2 that the current candle is on the 0% line or anywhere below the 0% line. So let's check. Now, once that condition is met by the auto Fibonacci retracement or auto Fibonacci numbers, then we have to check also and confirm if our MACD, the MACD line and the signal line have crossed the zero line. So when we see these two conditions, we are going to say, yes, there is a setup, a valid setup, and we are going to trigger our trade. We are going to place that trade and take our profit. So let's go and see what is going to happen. Now, we are about getting into the first entry, which is 8 a.m. in the morning. And if you look at it, you look at that your MACD line and your signal line is not below the zero line. And you also look at it that the current candle is not, the auto Fibonacci is telling us that it's a downtrend because we have 0 at the bottom, 100 at the top. But the current candle currently is nowhere close to the 0% line. And we want to see it close to the 0% line. So let's see what happens. Now you will notice that it has now changed from an uptrend, from a downtrend rather. It has changed from a downtrend to an uptrend. Now, how do you know? You are now seeing that for a, you are now seeing that 100% now is now at the bottom, then 0% is now at the top. So when you see 100% at the bottom, 0% at the top, this is an uptrend. Please take note of that. So the trend changed from a downtrend to an uptrend. So for an uptrend, 100% at the bottom, 0% at the top. Now, having said this, for an uptrend also, there is a condition you want to see. Please take note of this. For an uptrend, the condition you want to see that you want to see the current candle on the 50% line. This 50% line. You want to see it on this 50% line. You want to see it on this 50% line. This is the 50% line you want to see. For an uptrend, you want to see the current candle on this 50% line or anywhere below the 50% line for an uptrend. Just like I said earlier, for a downtrend, you want to see the current candle on the 0% line or anywhere below the 0% line. So let's continue. Now, this is an uptrend. So because it is an uptrend, we want to see the current candle on where the 50% line or anywhere below the 50% line. And at the same time, we want to see our MACD line and our signal line to have crossed the zero line. That is when we can say we have seen a perfect setup. Let's continue. It's going up, conditions not yet met. So focus on the candles alongside with the MACD to see what's happening. Now, you see, we just got into to 11 a.m. 11 a.m. right now. And what you will observe at 11 a.m., which is this line, you will observe that the current candle is actually meeting the condition for an uptrend because we are still on an uptrend, 100% at the bottom, 0% at the top. This is an uptrend. We have 0% at the top. And we say for an uptrend, the current candle should be on this 50% line or anywhere below the 50% line. So you can see from our chart that the current candle is way below the 50% line. Now, we need to confirm, since our current candle is telling us that it is below the 50% line, since it's an uptrend. Now, we need to confirm what our what our MACD is saying. We are expecting our MACD to be below the 0% line. But you see the MACD line and the signal line are above the 0% line. So it means that in this first entry, there was no perfect setup. So let's see what is going to happen. Now, between 11 a.m. to 1 p.m. is our resting time. We don't trade within this time. So the next time you are waiting for to see a setup is between this entry 2, which is 1 p.m. to 4 p.m. So let's see if we are going to see entry. Please take note of that. We are still on an uptrend. But we don't trade within this time frame. So now we are now in the second entry. Now, on the second entry right now, we are looking at it that this is a what? This is still an uptrend. And for an uptrend, we want to see the current candle on this 50% line, or anywhere below the 50% line. And currently, the candle is telling us that it is between 61.8%, look at it here for clarity's sake, is between this current candle, the price is between this 61.8% and 78.6%. That is where the price is, which has met the condition for an uptrend. But the question now is, we have to also confirm if the MACD is speaking the same language. Since we have seen that the auto Fibonacci have obeyed the condition for uptrend, is our MACD also speaking the same language? For our MACD to speak the same language, we want to see this our MACD line and our MACD line and signal line below the 0% line before we can now think of pulling a trigger. So let's see what happens. Let's continue. Now, you will now observe something happened. Immediately, this next candle showed up. You find out that the trend has changed again. Now, you have to observe the trends so you know where to pick your entry from. Now, the trend has changed. What you are now seeing, 0% at the bottom, 100% at the top. Now, at this point, now this is now a downtrend. It has changed from uptrend to a downtrend. And for the condition, like I said, for a downtrend, where do we want to see the current candle? We want to see the current candle on the 0% line or anywhere below the 0% line, which is the minus 23.6, minus 38.2%, or minus 61.8%. That is where we want to see it. At the same time, our MACD should be telling us that the MACD line and the signal line is below the 0 line. This is the 0 line, this green one. So this is what we are looking at for now. Let's see if we are going to see that setup. So it's moving, 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 moving. So you see that the current candle just came down a little bit the 0% line. So right now, the current candle, if I extend it, look at where the current candle is. If I extend it, the current candle right now is between the 0% line and minus 23% line. This is where it is right now. So at this point, what do you want to do? You want to pull a trigger, but you have to confirm, since the auto Fibonacci is now obeying the condition for downtrend. The question now is your MACD speaking the same language? Looking at it, you see that your MACD line have already crossed the 0 line, but your signal line is on the 0 line. So you might want to watch for more price action. Let that signal line cross down to the 0 line. You might want to be patient, which is an important aspect of trading, patient. So you want to see more price action. So let's see what happens. And you see finally that you now saw that your signal line, which is this orange line, and your MACD line, they have both crossed the 0 line. So at this point, this is the 0 line. Please take note of this. This line is the 0 line. Take note of this. So they have both crossed the 0 line. So at this point, you want to pick at this point, you want to enter this trade. Now, why do you want to take this trade? First, you have looked at your auto Fibonacci. It's telling you is a downtrend because you have 0% at the bottom, 100% at the top, and you are seeing that the current candle is below the 0% line, because we say for a downtrend we want to see the current candle on the 0% line or anywhere below the 0% line. So since it's a downtrend, since this is a downtrend, we want to see the current candle below the 0% line or on the 0% line. So in this case, it is in between 0% and 23%. So the condition is met. The next thing we want to do, check if our MACD is also speaking the same language. What do we just want to see our MACD do? We just want to see that our MACD signal line and our MACD line has crossed the zero line. So in this case, you see that the both indicators are speaking the same language. They are speaking the same language, meaning this is a high probability setup. This is a setup and this is what you want to see. So what I'm going to do, I'll take my horizontal line. I'll place my horizontal line here, this red line, which marks the current price, which is at 0.2884, which is the current price. Then the next thing I want to do, this becomes my entering point. So I'm entering at the current price. But for people who want to send signal to the signal group, because you want people to come and when you send the signal on the signal group, not everybody will have the opportunity to see it. So immediately. So what we do, we normally leave preset price. So what is the preset price? It's just an allowance. So instead of you picking it from this current price, you give a little bit allowance. And now the current price is at 0.2884. So you can put it at 0.2883. 0.2883. Now, this is preset price. So when you see preset price on the signal, this is how we get preset price. But if you are analyzing it yourself, you can pick it on the current price. But when you are sending signal to the group, give allowance, a little bit allowance. So here the current price is saying 0.2884. Then if I'm sending this on the signal group, I will give allowance 0.2883 for people to see, have the opportunity to come and also pick that signal. Now, knowing that the price will definitely come to my preset price, but because of this class, I will leave it at the current price. I'm not sending signal from the group. I'm teaching you how to pick your own personal signal. So I'm picking it from the current price. The current price is at 0.2884. So this becomes my entry price. This is where you entered. Now, please, once you have picked your entry price, you need to know when to come out. So for you to know when to come out, we have told you there's an advanced way of doing this. For you to come out of the market so fast, because you are not using the advanced way, which is known as the smart money concept, this period, why we want you to, the reason why we focus on you trading within this entry 1 and entry 2 is because this is when the smart money guys, the big financial institutions are entering into the market. They are injecting money into the market and taking out money out of the market. So you want to take advantage as a retailer with your small money to enter the same time they are entering and come out almost the same time they are coming out, or you come out before them. Because if you don't come out before them, they are going to liquidate you. So you want to come out before them. So because of that, we have said you guys should not take more than 3% take profits for now. You can take 3%, 4%, 5%, depending on how patient you are. But to be more conservative, just take 3%. And that will require you to use to measure your take profit, you need your price range. Now, price range, once you click on your price range, you are going to measure from this entry point 3%. Let me increase the thickness of the price range so you guys see it. I just want to take 3%. 3%. This is my 3%. Now, this becomes my exit point. This is where I want to come out of the trade. This becomes my exit point. So I can use another horizontal line to demarcate it, 3%. So let's look at this. At what point did I enter this trade? Let's look at when we are going to come out of this trade. Knowing that everything, all setup is being met. All setup is being met. So let's see when we are going to come out. So I entered at this point. Let me look at when I entered on this candle. I painted it black. This very candle. I just want to use it to check the time at which I entered. So don't get confused here. The reason why I'm putting that horizontal line on this candle, I just want to confirm when I enter. So when did I enter this trade? Look at it. I entered Thursday, which is today, as at 2:45 p.m. 2:45 p.m. So let's see when we are going to come out of this trade. So 2:45 p.m. Thursday was when we entered this trade. Please, so let's see when we are going to come out of this trade. So now I am going to play it. So let's see when we are going to come out of this trade. Let me increase the speed. Now you see, I'm playing. Now we've hit our target. We just hit our target. Now, where did we hit our target? Immediately, this candle touched this. This is what a signal I sent today on the signal group, SLM. So immediately it hits this group. It hits this exit point. Let's look at the exit point. What time? You saw we came out 6 o'clock. Remember, we entered when it was 45 minutes after 2 p.m. and we came out 6 p.m. from this trade. This is how to analyze using the two tactics indicator, your MACD and your auto Fibonacci retracement or auto Fibonacci numbers. Considering these two entry 1 and entry 2. Entry 1 is 8 a.m. to 11 a.m. Entry 2 is between 1 p.m. to 4 p.m. So while also looking at these two entries, you also need to ensure that at every point in time, you look at the trend of the market, if it is an uptrend or a downtrend. The trend of the market tells you where you want to see the current candle. And when you see the current candle, depending on the trend of the market, you also want to do a confirmation check with your MACD to ensure that your MACD is speaking the same language with your auto Fibonacci, number. And once they are speaking the same language, you pull your trigger by marking out your entry point and your exit point. Do not take more than 3% take profit. But if you are patient or a very patient person, you can go 4%, 5%. So, like in this case, let's see how many percent he even did. Let me see. You see, it went up and up and up, and it did more than, you see, 4%, 5%. So if anyone are taking 5%, to have still delivered. But again, to be more conservative, you take 3%. But if you want to go more than 3%, you are at liberty, provided you know what you're doing. So thank you, everyone. I believe this little video, you've gotten value from it. I believe it is self-explanatory. Thank you, everyone. See you some other time. Bye bye for now.